Hello and welcome to Lone Investor. So we have had a week of consolidation and let's take a look at some of the data and see what we can expect next week. As for medium long-term view, as I explained in this video, my view of the earliest bull one will be somewhere in mid-June after the FOMC meeting. So currently we're still about 2 months away, and as I've mentioned, at the beginning of May we have the FOMC meeting, so that will probably sink the market once again. And we have about 2 weeks before the FOMC meeting. So let's see if we will get a rally before the FOMC meeting or if we get a further consolidation and even possibly a little more price in before the FOMC meeting. So first off, after a few days of doing nothing, I finally bought one stock and it is DKNG. I have mentioned DKNG in one of my stock pick video for 2022, and back then I was given a target price of 15 and 16, and when it does hit that area, as I've mentioned, I did not have cash back then, so I did not bought this and the KRSI, so I have waited until now to buy it again. So as for Nasdaq, we have another big red candle for Thursday, and for the past week, the 13.3k level seems to be holding up. And I know I have said that I'm waiting for a 13k dip and possibly a little bit lower than 13k, but there are a few things that show up that changed my mind, and let's take a look at them. So first off, let's take a look at Nasdaq and our chart. So for the past 2 weeks, when Nasdaq is coming down, we are getting some sort of divergence in the RSI and the MACD, and the double bottom between Tuesday and Thursday, we have a very clear divergence on the RSI and the MACD. And also as Nasdaq is coming down, we have less of a sell-off volume. So I consider this as a bullish signal. And another data that we look at is the 10-year yield. And as I've mentioned, the 10-year yield is very close to the long-term resistance. And I gave a 2.8 to 2.9% as a strong resistance. So this is the monthly chart. Let's zoom in a little bit. So in 4 hours chart and in technical standpoint, we're getting a divergence in the price and the RSI. So in a technical standpoint, we will either see some sort of a consolidation or some sort of correction before the RSI will come back down to the mid-range level. And at the same time, this double top looks extremely weak to me. And as I've always mentioned, it is very hard to predict the exact top and exact bottom on things. So on Monday, it is possible that we might see a final push up to the 2.9% level before having a correction. But in terms of the toppings, I would say this is pretty close to a topping. And I'm looking for it to fall back down to maybe 2.6 or the 2.5% range, at least in a short period of time. And I've also mentioned if the drop of bond yield does not benefit tech stock, it will benefit bonds because bond price and bond yield has an exact inverse relation. And we take a look at TLT a few days ago. This is the ETF for 20 years treasury bond. So if you don't want to get into bond itself, you can get the ETF that represent it. And we talk about how it is close to the long-term support line. And if the bond yield managed to have a final push, we might see a little breakdown just like we had in the previous past. But generally speaking, it is still continuing on an uptrend. And as I've just said, it is impossible to time the up to the bottom. And I would say we're pretty close to it. And if it does manage to have a little breakdown, maybe we'll be looking at this level where there is a few supporting zone in these few candles. So this will be around 116. So if you decide to get into bond, now is a pretty good time, but do expect you might get to 116 level at some point. And a quick look at the dollar. Last time I was saying if this breakout is similar to the one when we have the COVID, then this will probably hit 101 or so. And the highest we have hit so far is 176. So again, it is hard to guess the exact top, but I would say we're pretty close to it also. And also, as I have explained in the TED 1 video, in order for a market to go up, the funds has to be moving back into the market. And as we can see in here, the funds are putting back into the equities and they're exiting bonds. So that is why we're seeing the bond yield rising. And as you have noticed for bond, in the past 3 times when we're at this low level, it will trigger a rally afterward. So we have one happening in 2014 or so, and we have another one that happens in 2019. And this drop here is the COVID crash. So we can see the funds are putting back in the equities right now. And the second data to look at is the insider transaction ratio. So this is the weighting between the buy and sell ratios. So if there are more insiders buying than selling, then it is a bullish signal. If there are more insiders selling than buying, then that is the bearish signal. So for example, in last year in September, they are very bearish on the market from September to November. And during that time, we see the market rally up to the top in December before falling back down. And since the market is starting to fall from January to March, we can see more insiders buying their company stocks compared to selling. And I always consider insider buying as a good sign for the company because there are a million reasons to sell, but there's only one reason to buy, which is they believe in the company. So with the data and the technical picture, I do expect some sort of a rally next week. We might see some final shake, but we're pretty close to the bottom before a next rally. And if it does rally back up to either this resistance line or this one, I would sell some of the stock to hold cash before the FOMC meeting. And as I've mentioned before, there isn't really a catalyst or data that will support the market to rally back up to the all-time high anytime soon. So the next market rally before any good news, I really see the top to be around the 15K area only. And lastly, I have noticed an interesting setup on Mullen, so you can also check the video out. I've given out a strategic play for engine supply, cut loss, average down, and the target price. So this is it for today. If you like the video, subscribe and give me a thumbs up, and I'll see you guys next time.